All right, everyone. Should I say good morning or good afternoon or good evening? Not sure which one to use, but hey, welcome to our webinar. This is Mark De La Paz from FX Instructor, and I'm here to really give you a preview about the ECB meeting. Now, first question is, are we really expecting anything out of the ECB this time? The general consensus out there from the market is that this is going to be one of those meetings where we don't really expect to see any changes in policy. We don't expect to see any rate action. That said, there are still some things that we have to point out. And what are these? The fact is that we are once again seeing signs of a slowdown in the Eurozone economy, particularly in its key economies in Germany. Growth, or rather recovery, has slowed down there. And if I look at the charts, let me show you something. Clean this up. If I look at the charts, we find weeklies here. If you can see that red dashed line, we'll find that our euro is actually at level that, or rather, our euro is where we were back when the ECB introduced its its own version of quantitative easing. Now, why is this such a big deal? Well, for one, if you have a slowdown in your key engine of growth, Germany, and your currency is back where things started when the ECB initially announced its QE program, then I would surmise that there's plenty of pressure for the ECB to do something. We have to remember that there are also other problems that the global economy as a whole is facing. Okay, the China slowdown, that's really been the headline for us for the last couple of weeks, months even, all about things slowing down in China. And if that's the case, a slowdown in China would have meant what? Would have meant that over the last couple of months, last couple of weeks, the value of their currency has weakened, and with the euro at the same time actually recouping its losses since the announcement of QE back in January, then we find ourselves in a situation where there is pressure to enhance the competitiveness of European exports, European businesses, Europe-made products. And one way to do that is to come up with measures that could weaken the currency. Remember, globally, we're now facing a slower global economy. Competition in the global markets as far as exports are concerned will be tough. And you don't want to be in that situation where your currency makes your products expensive. So that's one consideration that we have to think of. Another consideration that we have is that, as we said, Germany's recovery has slowed down. No one's really come in to take up the slack, which implies that you need policy measures to be taken. Now, like we said, no one's expecting any rate cuts or rate hikes, more likely cuts in this ECB meeting. No one's expecting anything to happen over the next 42 minutes, or rather in 42 minutes time. But there has to be pressure for even more QE, or maybe an accelerated QE to happen. And in a market like we have today, where I would say that things have been slow, word of pressure, word of bias to take action ought to be enough to get things moving. Of course, so what I'm saying is our rate announcement in about 20 minutes time isn't really all that critical. But in the subsequent press conference by the ECB, Mario Draghi will be taking center stage, and there is pressure for him to sound even more dovish than usual. And if you have a central banker who's sounding more dovish than usual, as far as traders are concerned, what do? Currency traders know that if a central banker is dovish, or sounding dovish, or sounding even more dovish, then you have to look at the possibility, the potential of taking the sell side of the currency. After all, if it doesn't make sense for someone to be optimistic about a currency, to be hawkish about a currency, or to be bullish about a currency, if a central banker is thinking about cutting rates or printing even more currency. Remember that when we say QE, we mean money is getting printed. And when you go basic supply and demand, printed money is equal to a cheaper amount of money. Well, as far as European indices are concerned, I would expect that they would actually benefit from a dovish sounding Mario Draghi. Remember that. Okay, let's say that Draghi hints about maybe accelerated QE. They will buy more bonds from the private sector. So where will the money that came from those people who used to own those bonds go to? And one of the options is for them to just put it on equities. Okay, so basically you put money in the bond market, and with increased money in the bond market, there will be pressure for those who sold their bonds to invest elsewhere. And that means if he sounds dovish, we expect a good day for equity markets. All right, so I guess I pointed out really the only considerations that we have for today. So let's move on to charts and see, okay, so what can we do? Is there anything that I can trade? Is there anything that's really, really attractive? So let me go weeklies first, across the board, and see which of these currencies are really, shall we say, which of these euro pairs are expensive. If I go weeklies, I would say that euro against Polish zloty seems to be really expensive, but I'm not really sure about the fundis that's driving the zloty right now, so I'm not going to do anything there. Well, EUR-AUD is interesting. Oh, where's my EUR-AUD? Oh, there you go. EUR-AUD is interesting because there's that idea going on that Aussie is a bit cheap, and if you have a currency that's seen as cheap at the moment with a potential to bounce, and you have a currency that is seen as expensive, you're likely to get you're likely to see the potential for some big price action. So I guess let's start with EUR/AUD then. What can we do with EUR/AUD? We're actually even higher now in EUR/AUD than when the ECB started bond buying program. Okay, so at a time when the euro was losing ground against the other currencies, your EUR/AUD actually went up. Aussie's cheap. Now, what's the reason behind Aussie's weakness? It's always been a concern about China. Exactly, commodities. And if you look at your chart for Aussie, okay, let me pull up an Aussie chart. Are we so cheap already? One would assume that there's the potential for us to bounce. How cheap is Aussie? This is a weekly chart. And see how cheap Aussie is. Not unless you tell me that there will be a further collapse in the commodity markets. I mean, sure, we all know that the commodity super cycle is over. But not unless you tell me that there will be another collapse. Some people are talking maybe oil prices will collapse because the Saudis need money and to fix their fiscal deficit. But another way of the Saudis fixing their fiscal deficit would be to just convince the other oil players to put some limits to their production. You put limits to your production and prices go up. Okay, so that also ought to help the Saudis in recovery, in addressing their fiscal imbalance. So what I'm trying to point out is, I really cannot see another big collapse in the commodity markets. And if that's the case, we may be at the bottom in terms of our Aussie sell-off. Technically, what's with Aussie? I'm looking at a weekly chart here, and I actually haven't seen this before, but I do notice that we've got a double bottom in our weekly chart for Aussie. Sure, we pulled back inside your trigger point, but hey, the double bottom would still be in the consciousness of traders. So there's a potential for a turnaround in your Aussie. But at the same time, we're saying that the ECB officials are under increased pressure to come up with a weaker currency. So if Aussie turns around and, Yildirim, I thank you for pointing out EUR/AUD because this seems to be the best. I was about to go through all the charts, but this seems to be the best when it comes to anticipating that big picture potential medium term, near term trend developing. Maybe even a long term trend. So Aussie is about to turn around, and we may hear from ECB officials about printing more money or trying to weaken the currency or increasing the pace of its quantitative easing program, which effectively means the same thing. They print a lot more euros, which means what to us? Which means that your EUR/AUD, which has been consolidating on a weeklies, which has previously failed at a bearish breakout, actually has the potential to succeed very soon. Now, let me just drag some stuff. Where was that? Okay, that's actually a good point. What about the deflation pressure? Now, the way I look at it, deflation pressure that we are seeing isn't really about, or rather, it's actually a result of our drop in commodity prices before. I don't really see that feeding into further weakness for commodities. Commodities are weak because the demand for them, especially for industrial commodities, basically fell. Okay, not much state-driven infrastructure investment in China. Okay, I was actually reading about 3 hours ago about how some British steel workers are mad about the new deal that the UK has with China because the Chinese were responsible for a glut in steel in the supply of steel. Now, sure, I would think that that glut in industrial raw materials has already been priced in commodity prices. We just need to see other places consuming what's there. All right, the Chinese don't need a lot of steel anymore, but there are many places in Asia, in Africa, that still need to build up. So I would tend to think that, at least on the industrial level, pressure for further declines in prices of your building blocks, things like coal, steel, would not be as high. And when it comes to at the retail level, at the consumer level, there I have to be honest, I'm not quite clear on what the picture is. But I would still assume that consumption ought to pick up. You can't really tell people to hold off on buying things for so long. So I don't think that the deflation expectations or deflation pressures are all that great. And it's not going to be a factor as far as the ability of Aussie to turn around. I would be more concerned about China in terms of their own manufacturing activity, on their own exports, because of your deflation expectations in the US and Europe. But Aussie, I think, very limited impact since it's already a done deal. We've already seen those price declines. And if you go to other places, you go to the Philippines, where I am, and you're going to see how much pent-up demand is actually there to build infrastructure. So the Chinese are done with their infrastructure building projects, but other countries are likely to step in. Hey, even the US is thinking about coming up with their first high-speed train network. So demand will be picking up. It's a question of when. So where were we? So we were talking about ERED. If you look at it today, we've had just about half of your average daily range for it. I've got about 137 price action, 137 pips. Average range is about 217. If you look at your chart, as we said, on a daily scale, it tried to break lower from a consolidation, could not sustain it. But guess what? I am seeing lower lows. So your breakout of this consolidation still saw you coming back in. But rather, I'm seeing lower highs. Okay, when it came back in, we had a lower high. In fact, for that lower high, we ended up with a long wick. And if I'm looking at our candles now, seems that I have another lower high. seems pretty indecisive so far. Let me go hourlies here. As long as we don't really see a push through our high from earlier in the day, I would be more focused on, can we get the bears coming in once Draghi starts talking. So I would believe that your EURUD, as you yourself pointed out, Can, that EURUD indeed is a better choice for me. There's still roughly about 80, 90 pips available for it as far as average ranges are concerned. If we actually hear a very dovish statement from Mario Draghi, I would not discount the possibility of going beyond average ranges and trying to make a run for your previous swing lows at 53.85. So any talk of accelerated bond buying or coming up with more measures, he doesn't have to give us specifics. He just has to tell us that this is something that we want to happen. I think would be enough for the market to take action. Would be enough for us to see a break of the earlier lows, make a run for your consolidation lows from earlier in the week, and maybe even get all the way down to your 53.85 over the next 24 hours. It depends on how bearish he is, but EURUD seems to have the best potential here. Of course, I also like another chart, and that's your Euro USD. Why EURUSD? It's not actually as nice when you look at it from a comparative as your EURUD. EURUD, you'll be coming near the top. Okay? Of your PA for the last 5 years. Whereas if I go EURUSD, this is the last 5 years and I'm still pretty cheap. We're just where we started the year, where we started when the ECB initially announced its bond buying program. Nonetheless, if we look at our chart, what are we seeing? We seem to be developing a bit, I would say, a porous resistance around your mid 1400s level. If I go candlesticks, I would argue that last week market gave us an evening star, at the very least a long wick in our weekly charts. What else? If I go dailies, we've only had average change is 95, $10 a pip. So in short, we're saying dollar value wise, there's plenty of room to go. So how do we trade it? Assuming that Draghi sounds bearish. Let me drag an indicator. Well, let's put it this way. Where am I intraday? If I go hourlies, we've actually pushed through our S1. We are below our pivot. Indecisive hourly candles. But the most important thing is limited range so far. Because if we are coming from a limited range and a new stimulus is introduced into the market, in this case, a dovish sounding Fed, or rather a dovish sounding Mario Draghi, that new variable will lead to your bank dealers thinking, hey, tight range, fresh news, let me drop my euro prices. Dovish Draghi wants to print money, wants to be populist. That's a good excuse for me to say, okay, break through your consolidation floor, take a run for your, you know what? If I do this, looks like our initial target would be a trend line support towards your 12-17 region. So the potential for euro losses is there. And we're less than a minute away from your rate decision, which, as we said, we don't really expect them to do anything. Although it would be interesting if they actually go full zero. Excuse me. And we're not really seeing anything. So 0.05 unchanged, yeah, as could be expected. So again, the more important stuff would be during the press conference. We want Mario Draghi to, the best scenario would be if he says categorically, looking at ways to increase liquidity, looking at ways to accelerate bond buying. Immediately, I hear something like that, my target will be for your euro to really trend lower, at the very least in EURUSD, get to that 1100 area. If he sounds that dovish, if he really points out targets. Now, if he remains coy, if he says, the economy isn't really doing so well, we need to provide some measures to support it, we need to keep a close eye on the recovery, Germany isn't all that healthy. If he talks like that, no direct comments about rates or the currencies, then that expression of concern would still be a nice excuse for your dealers to say, okay, enough of that, let me push euro lower, maybe see if there are sell stops to be triggered. Now, what if during the press conference you find volatility, markets, rather your euro is going up and down? What do you do? Folks, we do know that, again, euro's expensive. The solutions to the problems that's faced by most central banks right now is really to just weaken the currency. So any attempt to raise your euro up, have it push higher without actually hearing from ECB about a change in policy, without ECB taking any action, for me, is an excuse to say, okay, let that euro get higher and I will just short it if you give me a nice resistance area, if you give me a nice price point. And what are those nice price points? First would be your pivot at about 1349. Then I would look at yesterday's highs around 1377. Or I would look at Tuesday's highs at about 1385. So the only way for me to consider the buy side of your euro is for there to be a change in policy bias from the ECB. Otherwise, any attempt to push things higher as far as the dealers are concerned would be an excuse for me to come in from a better price level. There's really no reason why I would expect your euro to see sustained strength. All right, so we've seen EURUSD, we've seen EURUD. What else looks interesting? You know, we did get a nice data earlier from the UK. Details came out 0.9%, although the previous figures were revised into negative territory. That's, I would say, an impressive number for the UK. So my other option, as far as trade is concerned, is your EUR GBP play. It doesn't have the kind of potential that an EUR AUD short may have. But that said, what am I facing? This downswing. Like I'm coming from 50-fib retracement of that move from the last year, from September of last year. And good dailies, and let me just put this. So we've actually seen average ranges in your euro pound today, but whenever you have a catalyst, it's always a good excuse, a good reason to push things further. So what's our catalyst? Our catalyst would be a dovish sounding Mario Draghi. So another option for me is to actually go look for an EUR GBP sell-off, preferably coming from S1 or the pivot, but not necessarily. Since any short that I would make in euro pound, I would treat as something that I would hold for a couple of days. So you had a consolidation before, you triggered a bearish breakout, and it looks like you're trying to generate a follow-through breakout now. I really have to thank you for that pointing out EUR/AUD can. Normally, I don't really monitor EUR/AUD because the spreads are a bit wide for my taste. But there seems to be a lot of potential for this pair. All right, guys. Any other chart that you'd like us to go into, or any questions that you may have, perhaps? So really, we don't expect to hear anything new from ECB, from Mario Draghi. But if we do get anything new, it will be argument for the bear side of things, argument for a weaker euro. The ECB may not target currencies the way the SNB or the BOJ does, but still its actions, or rather its needs, point out for how important, how significant a weaker euro would be for it. So, comments, folks, questions, concerns? How are you today? How's trading? Probably very frustrating for many, given the tight range that we've had. Okay, let me just take a look at another pair before we wrap things. Now, EURAD, we got euro and a commodity currency. So let's take a look at your EUR CAD, another euro and a commodity currency pair. Very similar situation. We have our euro CAD at a rate that's higher than when the ECB started its own QE program. So what can I do with this? Let me see the numbers. An average range of 67. So far for the day, we have only half of that average daily range. In fact, we've spent the day pushing up. I have up EuroCAD in the first place. Well, I guess that's really the difference between Canada and Australia. In Australia, we're pretty confident that we may have gotten a low already, but not so much as far as Canada is concerned. So one thing that's missing from the EUR AUD combination is that idea of a bottoming out in the Aussie. Canada, we still have a sense of a dovish bias for the BOC. Technically, good pricing. The way I trade it would be to just wait. We haven't really gotten your average daily range yet. We have half the average range to go. I'll just fish for a breakout. See if prices drop below 4821. Okay, unfortunately, my neighboring office has decided to renovate. And that's the background noise that you're hearing. So guys, I guess I'll just wrap it up. Thank you for coming and hope to see you next time. Hope to see you next time that I do a webinar, because I'm going to give you a nice topic on how to trade NFP. See you next time, folks.